The results for the first 6 months of Tarsus have been very positive. Operationally, it's the quietest period in our 2-year cycle. Strategically, it's been very busy. We're quickening the pace. Our core strategy to grow the business has really been gaining momentum. Organic growth has been strong, up 9%. We've done a number of strategic acquisitions and a number of replications of our core brands into new markets. Operationally, we've had some very good successes, particularly within the emerging market portfolio. In particular, the Dubai business has performed strongly in the first 6 months. Our educational show, Guess, performed very strongly, as did our Chinese business, and in particular our Hope joint venture, which is based in central China, continued its growth pattern that we've seen over the last 3 years. Our Turkish business had a good 6 months, with particular good performance in our Ideal Home show. The second half of the year, we see most of our bigger shows, and they're continuing to gain momentum, as are our shows going into 2015. In America, our off-price business has continued to perform well, and the upcoming show in August is continuing to show good growth compared to last year. Our medical business is going through a major transition as we're moving out of a core niche of preventative medicine into the broader preventative market. We're seeing a lot of change, a lot of new products being launched, and we're very encouraged about this business going forward into 2015.
The revenues in the first half of the year have got good underlying growth. We do have the impact of currency headwinds against us. Overall, it's 11% adverse. The biggest impact is the US dollar, but also we've got Turkish lira, euros and renminbi working against us, but really it's the dollars that are important. We also have biennials impact. This first half of the year there are no biennials in our portfolio, whereas last year we had 3. To offset that, we have acquisitions. We got SRUF, the acquisition in China, and then we have that strong underlying organic growth at 9%, giving us revenues for the half year of 23 million. This 6 months is our quietest period over the 2-year cycle, but having said that, the revenues have flowed through into profits very well, and profits have translated into earnings strongly, with EPS up at 1.5 pence per share for the half year. In terms of net debt and cash, the big impact in our first half of the year has been the payments for deferred consideration and acquisitions. We funded that partially with a placing of £10 million in February, and overall we have gearing of 1.6 times, a net debt of £34.7 million for the half year. But we also have a very good operational cash flow generation in the first 6 months. That's come partly from a very strong performance on the 2015 shows, where we've had deposits and cash in early, and that's a very encouraging sign.
In terms of outlook, we're very encouraged for the rest of this year. Our forward bookings are up 9%, which is very encouraging. In particular, we're seeing good growth from our big shows in America, Off-Price, Label Expo. And going forward, we're seeing very strong growth from our big biennials that come back in 2015, in particular the Dubai Air Show, which is very strong at this moment in time.